everybody. Good morning, good afternoon, and good evening, depending on where you are in this amazing world. My name is D.I.Y, and welcome everybody once again for another amazing video of DIY investing. For today's video, we're going to be talking back about the 4-year cycle theory and then comparing it to lengthening cycles. A lot of people on Twitter are starting to resurface the idea that the cycle top occurred following once again to the 4-year cycle theory and proving why that theory was correct all along. I'm here to explain to you guys why I believe that, there's a few different factors we need to take into play, but I'm here to explain to you guys what this actually means moving forward. Is this the true cycle top, or do we still have to wait to get our true cycle top over the next few months? If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribe to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are in the description to go ahead and get both. Thank you guys so much for tuning in. And with all that being said, let's jump right into this amazing video today. Alrighty guys, we're going to get straight into it today. I want to talk to you guys about the two main theories that I see casted around Twitter, and that is lengthening cycles or 4-year cycles. Now you guys already know, if you've been a follower of this channel, I was really big on 4-year cycles and the time frames. And what we ended up seeing was, as we didn't get a major blow off top at the end of the year, everybody kind of just said I was an idiot. Everybody said how stupid 4-year cycles were and how lengthening cycles were actually right all along. But what I've actually noticed is, as Bitcoin sold off and we've retested that $30,000 mark, a lot of people are starting to resurface the 4-year cycle theory, saying that, oh man, this is actually the new bear market, and saying, oh wow, the 4-year cycle was actually right all along, and that we really did top it November the 8th of 2021. And so I wanted to talk about now resurfacing the idea of the 4-year cycle, and then I want to talk to you guys about, the lengthening cycle and what that one actually means too. Because at the end of the day, these are the two scenarios that I see playing outside the market, and so I want to talk to you guys about what I actually think is going to be the one that plays out. Now, if we look at this, the way we're going to measure this is, now what we're going to start off with is the lengthening cycles. I'm going to explain to you guys how that works, and we're going to measure from cycle low to cycle low. So it was 483 days, a little over a year. This cycle low to this cycle low was 1,155 days. And this cycle low to this cycle low was 1,428 days. So we have 1 year, 3 years, 4 years, right? And now if we're going from this cycle that we're in today, we have yet to see a true cycle low. You could draw it a number of ways, but personally, I don't think that we're at the cycle low yet. And so if we're looking at the lengthening cycles, what we have to go off of are the last 3 cycles, which if we're measuring from cycle low to cycle low, it's very obvious to tell that there is an expansion that's happening. It takes more time to develop each cycle low than the last prior cycle. It was a short pile here. In fact, it was like 120% increase to the next cycle. Then it was only about a 22% increase from 1155 to 1428. And so it was a small increase in these 2 cycles, and so I'm curious to see how much of an increase it is in this cycle, if it's an increase at all. Because keep in mind, guys, we could be following the 4-year cycle time frames, which would basically show that we already have a cycle top. But we'll get into that in a second. Now, this is how you ultimately come to the idea that the cycles are lengthening, is the fact that each cycle takes more time to get each cycle low, right? And so that is where you get the whole philosophy. Are we going to continue that into this cycle? Who knows? Let's talk about the 4-year cycle now and give you guys an explanation on how that one works. So if we're analyzing the 4-year cycle, we come up and we look at this part of the chart. We analyze here, we analyze here, we analyze this cycle top, and then we analyze this cycle bottom there. Okay, so now we're also going to put a new point as right here, because this was our cycle top. Now, the way a 4-year cycle works is if you measure from the cycle high to the cycle high, it equals 1,477 days, which is almost exactly 4 years. 4 years is 1,450 days to be exact. If we measure from the low of the cycle to the low of the cycle, it equals 1,428 days. So once again, this one was slightly over, this one was slightly under, but it follows the 4-year cycle. That's where the 4-year cycle theory comes from. Now, if we're assuming that this is still accurate, if we measured from this cycle top and we go 1,450 days, I mean, we got our cycle top that was just premature of 1,450 days, but I mean, if you're still following the 4-year cycle, then technically this was our cycle top at following the 4-year cycle timeframes. This was 1,428 from our cycle low to our cycle low. from our cycle high to this cycle high was 1,428 days. So technically, this is a 4-year cycle top. And so if you're a follower of the 4-year cycle theory, the next area in interest is going to be, where is our cycle low? Where can we buy the dip? So we're going to go another 1,450 days from our last cycle low, and that's going to take us at about here, November 28. That's where our approximate cycle low is supposed to take us. And so if we're following the 4-year cycle timeframes, we've already seen our cycle top that took place here at the 8th of November, and we're due for a 1-year bear market. Because historically, if we're also factoring in the length of time in bear markets, let's go ahead and factor those in. Let's go look at the last 2 bear markets and see approximately where our time frames are going to line up. So in this bear market, from cycle high to cycle low, it was 413 days. From this cycle high to this cycle low was 364 days, almost exactly 1 year. And so if we're going to go off of this cycle, if this was our cycle top, and our cycle low takes place here sometime at the end of November, let's just go to 364 days. And that's going to take us to anywhere from November 7 to November 28. Anytime in November, that would be our point to be buying based off of the 4-year cycle. And so here's where we get to the point of the video. Are we in a 4-year cycle, or are we in a lengthening cycle? Or is this just, something completely new that we've never seen that's neither? That's the point that we're going to be talking about in today's video. But if we're talking about the 4-year cycle, in my opinion, there's a lot to go off of as far as tangibility with it, which was always why I stuck to it for so long. I should have stuck to it even longer, but you live and you learn. What I was watching for was a blow-off top, and I just didn't think that this was a true cycle top at the time. And so let's talk about what we're seeing today. Now, let's talk about the 2 prior bear markets. The prior 2 bear markets lasted about a year in duration. This one was 413 days. This was 364. And so if this is, a bear market, then we would expect that we've only gone through about 182 days, about half the year. We're only halfway through the bear market if we're in a 4-year cycle, right? So that's how we get the 4-year cycle. That's pretty much what it's going to be like, guys. That would basically constitute that we still have half a year worth of downtrending markets before we get to our cycle low. Now, here's where we get to the point of the video. Are we in a 4-year cycle, or are we in a lengthening cycle? Now, personally, guys, the reason why I didn't take profits at the end of the year like I said I would is because what I originally said back in those days in October was if we weren't at a point where I felt like it was a blow-off top, I wasn't going to sell and I was going to hold. And that's what I did, and that's what we're doing today. And I'm still doing that today, and the reason why I'm doing that is because I believe that this is not a cycle top. I don't believe that the 4-year cycle is going to predict that this is the cycle top and we're going to enter, another 180 days worth of bear market. I don't believe that, and I'll explain to you guys my reasons for why. Now, originally, like we stated, there's a clear trend between every cycle low to each cycle low. It extends in the length of time between each, right? We can see that there's a clear trend developing where we're getting more time in between each bear market low. And so if we're to expand another 20% like we did from this point to this point, if we're to expand another 20%, we would be looking at maybe 1,650 days approximately, which would take us at about mid-June of 2023 as our next bear market. Now, the reason why I like to tell you guys that I believe the cycles are expanding rather than following the 4-year cycle, even though we have followed the 4-year cycle in the last 2 very closely, is because the difference in market structure. If we look at the last bear markets, we can see that bear markets, historically look about the same. Now, in this first cycle, it was a very short one. There wasn't very much money in it. So it's a very short length of cycle between cycle low to cycle high. And the bear market was only half a year compared to a full year, what we generally see today. But if we're looking at this from that perspective, our bear markets have lasted about a year, but each bear market, we see the same market structure. We see lower lows and lower highs. We see a very clear descending resistance all the way through, and they last about a year, right? This first cycle was about half that, and that's just because there was not very much money in it back at the day. But once we got into a little bit more mainstream, multi-billions in market cap, that's where we started to see bear markets historically lasting about a year in duration. And that's what we saw even in our 2018 bear market, with this one lasting almost exactly 1 year from that period of time. Now, what's interesting to me here is inside of our consolidation that we're at today, if we measure from the top that we saw at 65K to where we're at today, we're looking at about 392 days. We're just shy of 400 days worth of consolidation inside of this range. Now, what I think is interesting about this 400-day consolidation is the fact that we've done this without ever making a lower low. You know, this has just been sideways type of price action, right? It hasn't really made a clear move one way or another. And this looks a little bit more like a bull flag than it would look any sort of bearish consolidation. I wouldn't even consider this a bull flag. I just look at this as a resistance channel and a support channel, and we're literally just consolidating in between a channel. We're ranging right now between 65 and 69,000 and 29,000, 28,000 type consolidation. But when we're looking at the last bear markets, this is nothing close to what we've seen inside of a bear market. This was a bear market, very clear lower lows, lower highs, descending resistance. This was our bear market, clear descending resistance, lower lows, lower highs. This was our bear market. Very clear descending resistance, lower lows, lower highs. This is just different all the way through. Yeah, we made a big sell-off, but we immediately bounced and technically made a new all-time high. And now we're selling off again, falling back down to that original range. And so guys, I really don't know 100%, and nobody does, what is going to take place. But the way the consolidation looks, I personally just don't think that that was a cycle top. I really just don't think that the move that we saw at the end of November was a cycle top. Now, is it possible that we can still follow the 4-year cycles and the lengthening cycles combined? Yes, there is that potential. But the thing that I want you guys to remember here is there also is a very clear trend developing where each cycle low to cycle low takes more time to get each one. We should really look for the same potential to play out once again, where inside of this consolidation, we're already at a year. Historically, bear markets lasted a year. So if you're somebody that believes that this is a bear market, or we've been in a bear market since 69,000, then this is already at the point in which we would expect to see somewhat of a resolution inside of the consolidation. Either a bottom or, if we're going to follow the 4-year cycle, then we'd actually see a further capitulation. But we've never once had a cycle in which Bitcoin breaks a previous all-time high and then retest that previous all-time high. We've never, ever done that. And I just don't think that we're going to have that happen in this cycle either. This, to me, isn't a blow-off top. This isn't the top of a cycle. This is just a lengthy consolidation before we do get the ultimate top of a cycle. And we can also look to Elliott waves when we look at this. Now, if you are following the 4-year cycle, then this is what your Elliott waves would look like. You would be basically banking on the fact that this was our 5 wave, and our 5 wave was just a really tiny one and barely extended wave 3. And that's possible. I mean, that's definitely not, impossible based off of Elliott wave standards, but we've never done that before. All of these wave 5s were very clear and easy to identify. And obviously during these periods, there was a lot less money in the market, so wave 5s could be very volatile. But I mean, even in some of our less volatile wave 5s, we still see wave 5 as being a very impulsive parabolic wave, and that is the way it works out as a rule of thumb. Now, I just don't think that we've seen anything quite like what we would see. I just don't think that we've seen anything quite like what we'd see at a blow-off top or an end of a cycle where look how big this wave 5 was. Look how big this wave 5 was. Look how big this wave 5 was. We're not even going to compare it to the first cycle. But why would the final one in this cycle where we finally get institutional adoption turn out to be so small and lackluster? I do get the theory that maybe the institutions were just here to short it, manipulate Bitcoin. I understand. I just don't think that that's actually the case. I think that they want Bitcoin more than they don't want it. And so I'm still watching for a blow-off top. I believe that this entire consolidation is just a wave 4 before we do ultimately receive a final 5 wave in this consolidation. That's just the way I'm looking at the market cycle. I look at this as lengthening cycles. I believe that the 4-year cycle was invalidated when we didn't get the blow-off top. And ultimately what's going to be proven here is what we see as support. Does support hold where we're at? Are we going to finally see Bitcoin start going up again? That's yet to be determined. Bitcoin has basically retested that base support. We didn't kind of go all the way to our lowest low that we've set based off of the wick. And I'm looking at the Coinbase chart, which was about 28,700. But I mean, we're approaching that same support level if we're not going to break that support level, I don't really foresee us necessarily having some massive capitulation crash, bear market, and all of that stuff. One of the other things I'm personally looking at is actually the stock market to help give us an idea of what's taking place, because Bitcoin is highly correlated to the stock market as a whole. And one of the things I'm personally looking at when it comes to the stock market is just how many corrections we've actually had in the stock market that look pretty similar to what we're seeing today inside of the stock market. What we saw throughout this entire period was a lot of standard ABC corrections. And this is a type of consolidation that we see in many different uptrends throughout years and years, right? We've seen this play out in a number of different ways, and it looks very similar to the type of consolidation that we're seeing today inside of the S&P 500. This is generally the way that you're going to get a deeper type of correction inside of a market, is your standard ABC corrections. And you could even look back to the one that we saw over the course of about 10 years. Between the early 2000s and the 2008-2009 financial crisis, we saw a number of these ABC corrections all the way up. And this is exactly the same thing that we're seeing today. And that's why I'm not getting too shaken out by the current market conditions inside of crypto, because what I've noticed is that we've had a major correlation between the stock market. And the stock market is just completing another one of those ABCs. Could it go lower? Of course it could go lower. And that's what I'm saying is Bitcoin still hasn't retested our lowest support level. And so we still have a lot of choppy, volatile action would be my guess, whether Bitcoin swings up, whether it turns into, a capitulation like we saw during COVID. At the end of the day, it really doesn't matter. It already looks a lot like the COVID capitulation. And so if this is capitulation already, if you guys remember what happened in some of those earlier time frames, as we saw that massive panic, we got a lot of volatile price action, right? Where we bottomed here, we swung up here, and then we swung all the way back down near those wicks. We would expect to see something similar playing out in today's time for Bitcoin. Not much changes between each cycle. We saw a massive move to the downside, and so we could see a lower low here where we come back down and retest some of these lower wicks. Or, this could easily have already been our capitulation before we start shooting back up. I'm definitely not writing off either potential. I definitely think that you're better off buying Bitcoin at these prices than you are selling it. And, if you're a believer of the 4-year cycle, then you should already have been out of the market, and you should be targeting basically November at some point to be buying back into the market. For me personally, I just don't think that we're following the 4-year cycles anymore. I personally think that we're extending, and because we're extending, this consolidation is different, and that's why I don't think that we're in an actual bear market. This is just a lengthier bullish consolidation. If we look at the consolidation that we saw throughout this period, from our cycle low to here, it was about 455 days from our low to our low. And so if we're measuring from our low to our low once again, we're already basically at a year already, which is really interesting. If we're measuring from the low of maybe May 17th, depending on where you measure the line from, you could measure it from over here at about mid-June. And either way, no matter how you measure it, we're already pretty close to a year inside of our consolidation. This one was a little over a year by about 90 days, whereas this one is, just under a year. But historically, whenever we see a bear market, it lasts a year. That is generally the length of time in each correction. And that's the way that we've been up to this point. And so with us not developing a clear blow off top and a clear descending resistance like we did with this cycle, like we did with this cycle, like we did with this cycle, and us making more of a bull flag type of formation, I just think that this isn't a cycle top, and we're ultimately going to get a final wave 5 before we do get a true cycle top, right? True cycle top, big wave 5. Once we do end up topping from that point, that's where I would expect us to see a clear descending resistance, right? Something like that where we fall all the way back down. That's what I'm watching for. Wanted to give you guys this video as a way to summarize some thoughts and perspective inside the market. I know it's a crazy time. I know there's a lot of different beliefs thrown out there, but this is my personal trading plan and belief. And so I just wanted you guys to know that I'm still long and strong, still very much bullish, still looking to accumulate more in the long term, especially with this sell-off. This sell-off is just giving us all a greater opportunity at getting in. We're literally sitting at support. I mean, you guys would have wished you could have bought this all the way over here when we were bouncing off of these levels and we were sitting at resistance here. Everybody wishes they could have bought down here. And then when we're actually given the opportunity to buy down on support, nobody wants to buy it, and they're always exclaiming that we're going to new lows. I'm just telling you guys, the time to get bullish is at support. And so whether I've been bullish all the way throughout this correction, who cares, because I've continued to buy throughout this entire dip. I'm buying all of my normal positions. I'm re-adding to positions. I'm longing new positions, strengthening them for this coming run that I believe is going to be taking place. And so at the very least, I'm putting my money where my mouth is. I don't care what you guys do. This is ultimately my own trading plan and journal of what I'm doing inside the markets. And this is what I think is going to be playing out. And so if you guys found value in this, leave a like, comment, subscribe, hit the notification bell, join the Discord server, download my free ebook, join the VIP, get access to all of my trades in that. Links are in the description. Thank you guys so much. And with that being said, I will catch you in the next one. As always, peace out.